Now, if you for some reason stumbled across this YouTube video hoping that you were going to find a free to use template for the Benjamin Graham formula valuation, and you don't necessarily want to hear me even talk about Benjamin Graham, how this formula works, etc. If you just want to use this free to use valuation tool and that's completely it, no problem whatsoever, it's the first link down below in my description. But for those of you that want to learn a little bit more about this formula and why it's so effective, along with some history on Benjamin Graham, because this was a very, very interesting guy. Well, stick around, drop a like down below, and let's get right into this one. So this right here is a free to use Benjamin Graham formula valuation tool, and it's a tool that you can see across the internet. Some people are charging for it, some people are offering it for free. I'm offering it completely for free. Like I said, it's the first link down below in my description. Now, before we dig into this valuation tool and type in some different stocks and try to get some more insight on how this tool even works, I thought it'd be kind of fun to go through some history when it comes to Benjamin Graham, the Benjamin Graham formula, and why this is such a famous formula, especially when it comes to finding the true value of different stocks. Now, right here it says the Benjamin Graham formula is a formula for valuation of growth stocks. It was proposed by investor and professor of Columbia University, Benjamin Graham, which here's a picture of him right here, and he was often referred to the father of value investing, published in his book, The Intelligent Investor, which if you haven't read this book, definitely check it out. It's definitely one of the most famous investing books across the entire world. Now, Graham devised the formula for lay investors to help them with valuing growth stocks, in vogue at the time of the formula's publication. Graham cautioned here that the formula was not appropriate for companies with a below par debt position. My advice to analysts would be to limit your appraisals to enterprises of investment quality, excluding from that category, such as do not specific criteria of financial strength. Now, as far as the formula calculation, listen in guys, it says in Graham's words, our study of the various methods has led us to suggest a foreshortened and quite simple formula for the evolution of growth stocks, which is intended to produce figures fairly close to those resulting from the more refined mathematical calculations. The formula as described by Graham originally in 1962, addition of security analysis, and then again in 1973, the addition of the Intelligent Investor is as follows. It's V equals EPS times quotation 8.5 plus 2 point G quotation. Now to break down all these different variables, number one, V, the value expected from growth formulas over the next, say, 7 to 10 years. EPS is a trailing 12 months of earnings per share. Now 8.5 equals PE based for a no growth company, and G equals reasonably expected 7 to 10 year growth rate, and it's a C sustainable growth rate from financial perspective. Now also the revised formula, Graham later revised his formula based on the beliefs that the greatest contributing factor to stock values and prices over the past decade has been none other than interest rates. In 1974, he restated it as follows. Now, the Graham formula proposed to calculate a company's intrinsic value, or V, as V equals EPS times 8.5 plus 2G times 4.4, and then this is going to be divided by Y. Now, to break down all these different inputs, V is once again the value expected from the growth formulas over the next 7 to 10 years. EPS is still the company's trailing 12 months earnings per share. 8.5 equals PE based for a no growth company. G, reasonably expected 7 to 10 year growth rate of earnings per share. Now 4.4, this is the average yield of AAA corporate bonds in 1962. We have not specified the duration of the bonds, though it's been asserted to use a 20-year AAA bonds as a benchmark for the variable. And you're going to see people use AAA, AA, but again, this is more or less just a way to sort of evaluate a stock, evaluate a company. It doesn't need to be exact. Now the Y in the formula is going to be the current yield on AAA corporate bonds. Now, although there's tons of different Benjamin Graham formulas out there that do have different metrics that take things from the previous and the revised Graham formula, I went in and built out a Benjamin Graham formula valuation tool that has the following inputs. It is stock ticker symbol, which what's really cool right here is all the different boxes in yellow. These are the boxes that you can go in and change to whatever different stock that you want. And whatever ticker symbol you put in here, it's automatically going to populate with all the information you need. So for example, if I type in AAPL, that's the ticker symbol for Apple stock, and then press enter, it's automatically going to populate Apple's current stock price. It's going to populate things like the trailing 12 months earning per share. And the only things you have to worry about is messing around with is the growth rate, which of course you can Google any growth stocks growth rate moving forward and try to get an idea. And of course MOS, the margin of safety, which as you move this percentage up or down, it's going to change where or where not a buy zone could potentially be. Now again, this is just one formula, just one estimation. This doesn't necessarily mean that just because Apple stock is currently trading at where it is, that Apple stock at $84.44 is going to be in the buy zone. Because if we change the margin of safety even a little bit, you can see that Apple's buy zone goes up substantially, along with changing changing things like Apple's growth rate. If Apple has a massive growth rate moving forward, the buy zone is also going to change. But what's cool about this tool is you can go in here and type in any ticker symbol of any stock throughout the market, like Visa stock, for example, and see what the formula spits out as far as a buy zone and if or if not there's any margin of safety whatsoever. Now, all the inputs that I use for my Benjamin Graham formula valuation, I have the stock ticker symbol, which again, you can type in whatever ticker symbol you want. I have the stock price, which automatically populates no matter what ticker symbol you type in, which is pretty awesome. The growth rate, of course, this is going to change depending on what stock, what ticker symbol you're talking about. You're going to have to go in and do some research and see what the growth rate looks like for whatever company or stock we're talking about. We have the trailing 12-month EPS, which is automatically going to populate right after you type in whatever ticker symbol you're looking for. Margin of safety, this is going to change depending on what margin of safety you're looking for with whatever stock you're talking about. Now, the AA corporate bond or AAA corporate bond, this is just an estimation. It's being pulled live. It's around 4.9%, at least from the function that we're getting. Now, fair value is going to be based off all these different things. It's going to give you an idea of what a fair value of the stock that you're talking about is currently. And then with a margin of safety applied to it, you're going to get a buy zone applied from everything above. Now, what's cool about this formula that I made for you guys, again, 100% absolutely for free, the first link down below my description, is you can go in here, mess around with it. You can go in here and change things, add things, do whatever you want with it. I just wanted to quickly make a fun tool to mess around with and see what the formula would give us if we type in different ticker symbols for different growth stocks. And honestly, it's a ton of fun to mess around with. Now, this probably isn't the first time you're going to see me talk about the Benjamin Graham formula on my channel because I think this tool is awesome, but still, I 100% wouldn't live or die by this tool. I think it's just one tool in the basket of tools, the basket of research that you need to do as a long-term investor. Now, to use this formula, to download this on your own, like I said, it's the first link down below in my description. Get the link on Google Sheets, and then of course go to make a copy and mess around with it yourself. Let me know what you guys think. Now, if you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.